Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Shawn, Cruz, Manager of Trader Services at TD Ameritrade, to discuss Nasdaq-100 levels to watch as we kick off the final month of 2020 and as the index hits an intraday new high. Shawn, what's driving the Nasdaq-100 this Wednesday afternoon?
There's a lot of, I think, positive news coming out here just in general for equities, but especially for some of these NASDAQ companies. One thing I noted was Amazon, I think, had some pretty good headlines today. We got some pretty good news from the consumer if we're looking at Red Book sales. Started out the holiday season, at least if you're going to look at December, really when we're getting in the final stretch here, on a pretty solid note. And I think a lot of people were curious what sort of consumer would show up in December. Amazon also announcing a lot of new news on its Amazon Web Services platform. They're going to be partnering with the Mac developers for the Mac OS system. They've also announced some new industrial tools that are going to help a lot of these industrial companies optimize their business processes. So it's really driving the NASDAQ as we start the last month of the year, kind of seeing what we've seen pretty much all year long, and that was very strong performance from the NASDAQ.
Yeah, that's going to be pretty cool watching Apple and Amazon team up in that respect. Shawn, let's shift gears a bit away from the Nasdaq-100 and take a look at cyclicals because, again, November had such tremendous performance, and a big part of that was what we saw in some of these more value-oriented sectors.
It was, and so looking at one of the stronger sectors, the Philadelphia Exchange has an index that tracks oil services companies. That's sort of leading the way today. You had some pretty solid performance, which was interesting because you actually had oil moving lower. But I do think it looks like a lot of these oil companies are maybe looking ahead more to a recovery in demand. Also, not getting anything earth-shattering out of OPEC plus just yet this week. So I think it does bode well for the future for a lot of these oil services companies who maybe need some of these big oil drillers to come out there and start revving up operations again. It would certainly provide more business. Also looking at banks, I always like to look at the Philly Banking Index because it's a very diversified index. It looks at some of the majors and also some of the regionals and a few other names tied more to capital markets, but that's also having an incredibly strong day. I tie that to yields. And once again, I think yields are looking at maybe a little bit of inflation on the expectation that maybe you are going to get some more stimulus here sooner rather than later. Also with the potential to start reopening things or easing restrictions depending on the timeline for the vaccine distribution, which I think we've getting some optimistic headlines around that. So you have maybe some inflation and also some growth potential out there as people get more optimistic, pushing yields higher, and that's also helping out the banks.
Yeah, it'll be interesting, Shawn. What are we going to talk about in 2021 once the election transition has occurred and we're on the other side of COVID-19, which as a human being, that's a welcome thing, but it'll be interesting to see really what moves the markets.
I think so, and I really think it's going to be a matter of what sort of a recovery we get. And I also think some other items driving optimism today around the macro front, where we're looking at a lot of those PMI, ISM, market type indices that track sort of strength or the how broad-based the strength is for a lot of these sectors, especially in the manufacturing components. And we're actually getting readings that are coming in above 50, even though they maybe tick back slightly, we're still above 50, which indicates expansion. So if we can go into a more reopening and a more robust recovery with a solid manufacturing base, if we can get stimulus to sort of help households and also help small businesses alongside that, I think that's going to be really what we want to track moving forward is recovery from a lot of the small businesses, also recovery in the labor markets, wage growth. I think the macro economic data points are really going to be key as we start to hopefully get to this reopening of the economy sooner rather than later.
All right, Shawn, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.